Thumbs up. We'll call this meeting to order. Please rise and join me for the Pledge of Allegiance.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
We have the approval of the memorandum of the September 7th, 2021 regular meeting. Copy has been posted. If there's any questions on that, I'll make a motion to approve.
Second.
Second from Vice President Plunkett. All in favor? Aye. All opposed? The memoranda of the September 7th, 2021 regular town council meeting is approved by a vote of 5 in favor, 0 opposed. Amy, any requests to speak?
No, we have no request to speak.
Okay, very good. Any mayor administration update?
No mayor or administration update.
Okay, and councilors, the mayor did communicate to me that she is going to be sending the deputy mayor to every other meeting to provide us with updates. So not this time, but hopefully the next meeting. So we appreciate that. Old business, we've got a consideration of a veto override on a resolution establishing the policy by which members of the town council may participate by electronic means of communication. I did get a little background on this. So we voted on this last time. We had previously voted on this and the mayor had vetoed it, but she vetoed it by not signing it. So you can actively veto it and say, I veto it, or the rules of reorganization. If you don't sign it, then it is considered vetoed. So the first time we passed this, the mayor did not sign it. So it was vetoed. We were not aware that she did not sign it. And if we then don't overrule the veto at the next meeting, that veto stands. So being unaware of that veto happened, we had another meeting. This was a policy that I thought was important and the council voted unanimously on. And so we then put it on the last town council meeting. It was again unanimously approved and the mayor has again chosen not to sign it. Now she did communicate her concern was that this resolution does not address the members of the public being able to participate electronically. However, this resolution is really structured in a way to govern statutorily how the council operates and not how the public operates. The public does have the right to participate electronically if the council is doing the meeting electronically, but that is set up through the rules that we set up previously for how the council operates. So this is really just around can the council participate electronically or not? And that was the statutorial piece from the state we were trying to cover. So appreciate the mayor's concern, but it's not really relevant to what this was trying to do. Did I miss anything there, Adam?
No.
Okay, great. Councilors, any questions on that summary? Basically, we have to vote on it again if we choose to override the non-signing veto. Hearing nothing.
Josh, other than, I mean, not on this necessarily, but to that point, is it something that we have passed as a resolution, or is it just a rule that we came up with around how the public does engage? I mean, it's not necessarily part of this, but where is that?
So that piece is in the council rules and procedures that we had voted on 3 months ago or so. And effectively it states that if the council is meeting in person that participants need to be in person. And if the council is meeting electronically for some reason, like we had passed due to COVID, the public has the right to meet electronically as well, is sort of the TLDR on that one.
So if we were to address that, that would be the place to address it there in that document, not.
Correct. And it is addressed in that document.
Okay.
Yep. It's already covered there.
And Mr. President, by the time we get our Wednesday information packet, that's when it goes out to the public that we're going to be meeting electronically or not, correct?
Correct.
So
Yeah. Basically,
they have every bit of knowledge as soon as that packet comes out to join the following Monday.
yeah. So that's a good point, Councilor Melton, is that the packet has that information and we then can't change that packet. We sort of set the rule that once it's, and that was part of the same rules that Councilor Burke was talking about. Once the packet is distributed, we're not adding additional things to it sort of last minute just for transparency and public disclosure. So we would not say we're meeting electronically and then turn around at the last minute and decide we're going to meet in person. That's part of the public notification rules that exist within the state.
Thank you.
Mm-hmm. Well, if there's no other questions or comments, those are good comments. I'll make a motion to approve.
Second.
Second from Councilor Melton. All in favor? Aye. Any opposed? Resolution 2021-16 veto override passes with a vote of 6 in favor, 0 opposed. I think that's the first veto override this council has ever had. So making history. New business. We've got only one item. We've got the 2022 budget presentation. Ms. Havard, the floor is yours.
Good morning, counselors. I'd like to bring up Greg Garatas from Financial Solutions Group. He's going to talk about some of the economic factors of us going into this 2022 budget cycle. We are going to keep it high level for this conversation and just kind of set the stage for what we're working with and the challenges that we're facing in this fiscal year.
Good morning. Thank you. And I think I met most of you on Zoom. And hi, Adam. Nice to see you. My name is Greg Garatas. I'm president of Financial Solutions Group. And we've been working with the city and kind of charting the course. And I wanted to kind of begin a little bit of Budget 101 because we kind of start throwing out a lot of terms as we go through budgets, and then I'm going to kind of step through some of the revenues and the expenses. And I like to say, stop me at any point in time if you want to say, Greg, that's the worst thing I've ever heard. Can you kind of adjust that or redo that? That's fine. And if you agree with something or understand something, always a nod or something like that's very, very helpful. But a lot of times and I may sneak over here if there is a marker. Now I like to write down a few things. I don't know, Tammy, is there a marker around? Okay, thanks. We throw out a lot of terms as we go through budgets. I'm going to I like to roll up my sleeves. One of the things is what Tammy's been working on is the June 30th balance. And I think she's got a real good handle on that and for the tax supported funds. And I like to tell everybody, don't forget, this budget is an 18-month budget. Okay, so there's 18 months that fall into here. Now, a lot of people will say, well, wait a minute, we're talking about the 2022 budget. And I'm like, yeah, but don't forget what really, when we set up what we call the Form 4B or the 16-line statement as it used to be known, if you've been around here in budgets for a long time, you'll know it as a 16-line statement. And so what that does is it starts with the June 30th balance of right now, 2021, and we really go all the way through to December 31 of 2022. And actually the new Form 4B on Gateway, that's what it's called, Form 4B on Gateway, it will kind of sum that up and it will actually show your projected balances as of the end of this year, and it will show the end of 2022. So notice I said the end of this year, that kind of comes in right here. So we've got 6 months here, we've got 12 months here. Here's our 18-month budget. Okay, now how do we get the budget into Gateway and how do we get it in front of you? We get it commonly what's known as a Form 1, and Form 1 is also usually the budget ordinance. So that will have what I call all the gory details of the expenses, line by line, and really is what then goes into Gateway as Form 1, which is all the expenses. Now, those expenses are for 2022. Okay, now how do we get this 18 months of expenses in there? What we'll actually do is put in receipts for 6 months. We'll put in the cash balance as of June 30th. Okay, keeping that right across from there. And then what we will do is we will insert the receipts and we'll insert the expenses, the proposed expenses for 6 months, the rest of this year. Okay, and then we'll set up their receipts and the expenses for 12 months. Now, that's a lot more maybe than you need to know because most councils focus right up here on Form 1, but I believe all my councils ought to be well educated on what all goes into the process, because what happens? What happens is if you make an additional appropriation, and just for the record, an additional appropriation is something that's not in your budget, okay, that you want to either buy or you want to do. Let's say we want to do an extra pickup truck, okay, in the general fund, and we didn't have it budgeted for 2021, then what we will do is additionally appropriate that, and I understand that you've done that in the past quite a bit. We will additionally appropriate that, and that'll bring in that $30,000 truck, or maybe $45,000 now, if we can ever get one, maybe it'll be $55,000. But I hear a bunch of them are parked outside of Louisville. So once we get that truck and we're able to buy it, that's an additional appropriation of $30,000. That affects this calculation right here if we do it this year. Okay, and what that will then do is affect the 12/31, the December 31, 2021 budget or amount in cash balance. And so it'll come into there. And what does that do here on the Form 4B? The more you appropriate here, the less you kind of got down here. Okay, so additional appropriations in this year kind of affect the overall 2022 budget, unless you're consciously drawing down cash balance. Okay, so very, very important to understand additional appropriations and how they affect the process. Now, the one other concept that we throw out a lot of times is encumbrance. I don't think you've really done any encumbrances in the past, have you? Pardon? Okay, great. I don't like encumbrances. I've seen them actually took Gary, Indiana down 20 years ago. They were encumbrance kings. Okay, they kept encumbering, and they didn't have the money. The money didn't show up. That's why the state form actually now is there, and it forces you to pull down your cash balance before it approves the calculation and before it approves the additional appropriation. They were doing it based upon a lot of the money was coming and it never came. And so that used to be the old process. And so an encumbrance kind of what you're doing is you're taking, if we do it to the end of the year of 2021, what you're doing is basically increasing your 2022 budget, right? So you encumber something at the end of the year into this year, and you say, we can't really pay for it yet because we don't have the item, but it is accounts payable because we do expect to receive the item, and we've got a contract for it. And I looked at your encumbrances from last year, great documentation on the back of it. It showed all the different reasons, and exactly what I've always promoted is you need an encumbrance ordinance. Okay, says what we need it for and why we need it, and it really kind of makes it happen and makes it documented well why you increased the 2022 budget, or why you would if you did it at the end of this year. But you actually did it last year, so it increased the 2021 budget. So we've kind of talked about Form 1s. We kind of talked about Form 4B. I left some forms out, okay? I left some numbers out. Even though I'm a CPA, I usually can count, but we got to go through those here in a minute. So does everybody kind of understand how the Form 4B and how this becomes an 18-month budget process, how you really have to, what you do during the year also affects it from here on out, and the Form 1. Any questions on any of that? Okay, so let's go through, let's start going now down the road of revenue and 2022 budget. So the next form is miscellaneous Form 2. Miscellaneous revenue Form 2. Notice I now have gone 1, 2. Okay, miscellaneous Form 2 is really, again, a very, very important form, I believe, also from the council standpoint, because what does this do? This document brings in the fires in the general now, so it brings in the fire revenue, it brings in the building and planning, it brings in all of those miscellaneous revenues, okay? It also brings in lit, and I'm going to use lit as a very general term because lit is divided up in a couple different buckets, but it's local income tax, right? So it brings in LIT into the miscellaneous Form 2 revenue page. So when we add all these up, this will eventually feed into Form 4B. Remember I told you how the revenues were coming in and the expenses were coming in for the second half of this year and for next year. Now let's explore a moment or two about what's going on, and I don't really like it, what's going on in the income tax world here in Boone County. So since we're looking here, this from year to year, all of these fees kind of auto excise. I should have put that in the bucket. I'm going to put these in 3 buckets. Okay, make it real easy. We're going to go 3 buckets of revenue: property taxes, LIT, and then I'm going to call it the miscellaneous Form 2 revenues for everything else. Okay. Notice I said miscellaneous Form 2 revenue has this one and this one. It does not have property taxes. So I'm sure you've heard this news, but here's the news at this point in time. We're looking at LIT, your second biggest source of revenue. Number 2. That's why I put them in order. Okay. Number 2, your second biggest source of revenue, going down about a negative 4.35%. Okay, that's very, very significant. Okay, very, very important from your standpoint. Remember, most councils spend a lot of time on Form 1 on expenses. We got to spend a lot of time on revenues.
Greg, how sophisticated is the state when predicting lit? What statistics are they doing it down at the county level, or are they doing it down at the municipality level?
They first do it at the county level. They now have done it down to the individual taxing entity level.
Got it.
Okay, great question. One of the reasons why I've told all my budget clients this year October is a great month to do your budgets in. And everybody says, well, wait a minute, we did them in August. You know, before I had a county down in southern Indiana just beating the heck out of me. Can't we do this earlier? Can't we do this earlier? Sure, you can do it in August. And guess what? You have no information. You have no, the property tax growth quotient really comes out in August. The lit comes out, just been coming out in September. And your AV in some counties will wait another month for AVs. In some counties, they've been out for over a month. In Hendricks County, they just came out last week. And so, great question. And what we want to see is, number one, what is it at the county level? As you know, your neighboring, you know, I do Westfield's budget. The neighboring community over there, they were down 3.8% overall. Hendricks is slightly up. I look at the powerhouse counties, I call them the counties with an H, with the income. And Hancock County, which I also do, they're up slightly. But here in Boone County, we because of maybe COVID, which I'm going to say that was part of it, okay? But also keep in mind, when you said how sophisticated are they? They are still back about 18 months, okay? So they're still rolling their database, you know, and the fact that income tax returns were delayed has some impact, okay? Now, what they've done at this point in time, I think you actually got the certification, didn't you, Tammy, on your LIT? Yeah, so they are now set in stone, pretty much what we're going to get. So we are going to get this much less, okay? That's really, really important, okay?
Is
Now,
there ever a true up? I mean, is there ever a true up?
absolutely. Matter of fact, you saw that true. I'll call it a true up. I'll go that route with you. What they do is they do a supplemental distribution.
Okay.
And the supplemental distribution is a one-time supplemental distribution. If your trust balance, remember, there's 92 trust balances for LIT at the state of Indiana, 92 counties, okay? Then there's in some of them, there's sub-trust balances because they're special purposes. We're not talking about that here in Zionsville, but there are special purpose ones. So the 92, the Board of Finance comes by usually before April or May. They usually sit down April, May. They're mandated to look at those 92 trust balances. They apply the new formula. The old formula used to be 6 months of balance. The new formula is about 90 days balance. They look at that and then they make recommendation. And last year we had about half of the counties, I think 40, maybe 45 out of 92, that got the supplemental distribution. And I believe you did too. And I think it was to about $1 million, wasn't it? Pardon me? 1.9 in total. Okay.
Is that inclusive of the public safety lit?
It included the public safety lit.
Got it.
Yeah.
So they were pretty off last time. I mean, our budget's $30 million. We got a $2 million supplemental. That's a pretty swing
Yeah,
and a
I
miss.
guess, you know, if you add your 13, if you add your 13 from your general fund and your other, yeah, I think they, you know, it was off as a county as a whole. Now, remember, that was pre-COVID dollars, okay?
Sure.
That the database was reconciling. And so at that point in time, yeah, it was your balance grew, returns came in, and there was a lack of data for about 2 months because the returns were late. So yes, in that case they were. I don't think the trending in the past had been that they've been off that much. Okay?
It's just interesting to me that like a Hancock County is seeing their lit revenue go up slightly, and I'm surprised that we are seeing that, regardless of COVID, that dip, given the demographics of Zionsville relative to the demographics of Boone County, which are totally different. If the state is making predictions based on a broader Boone County number, I feel like we are going to be getting less until we get a true up, and that budget's going to reflect that. Can you Do they provide supporting information? Can you appeal that number? Is there anything that goes on around that?
Okay, so that was a couple questions.
Yeah.
So can you appeal it? No.
Okay,
Do they do it? They do it on Boone County as a whole. Okay, so there's, and I love getting into these weeds, so let's go.
well, I don't want to get too far in the weeds because people have stuff to do, but we can talk offline. But I just, if we're being dictated by Boone County, I feel like
So
that is a
doing
misleading
Boone County
indicator.
As a whole, which I agree with you. I don't think we have the same flavor here as we have elsewhere. In Hendricks County, I can see it because Brownsburg, Plainfield, and Danville.
Yes.
Now I was really surprised Hamilton County went down 3.8%. But back in the old days, the Indiana Department of Revenue's computer used to give you better income information. It had better breakdowns. I actually have it on microfiche back since the 70s. Okay, and that showed when I looked at it back in the early 2000s, Hamilton County had a lot of bonus income in there. Okay, that almost $1 billion, almost 800 million to $1 billion of bonus income in there that was paid out and separated in the database. And actually, that's what I believe that did not come in last year or the year before, because I don't know about you, but I have not heard of very many bonuses being paid, or at least in the levels that they were in the past. So I think that's what I beg to offer. That's what you saw some here in Boone County. I beg to offer that's what we see in Hamilton County, and in Hancock and Hendricks, you just keep plowing. It's kind of a plow horse. They just keep plowing along and gaining more people, and the income just, so it doesn't surprise me. Now, remember, when I say up, I think they were up about 0.5% 1%, but that's a big difference between a decrease of 4% and an increase of 1%.
And I mean, Zionsville's growing too, and growing with,
Oh, sure.
Well, but, and so you said this is what, 3 years in arrears or 18 months in arrears? In other words, it's not going to, so it's not going to necessarily catch up someone that moves in last year. We may not reflect that in the lit revenue, correct?
Correct.
But it does eventually catch up,
may
right?
Not.
So $1 paid in lit by a Zionsville resident will eventually get to Zionsville when the state catches up. Is that a fair statement?
Now remember, now how is the pie of Boone County divided? Okay, so how is the pie of lit divided? And so, in other words, your share, how do you get your share? Remember, your share is based upon the levy, okay? Not the amount of population, and not based upon the income of Zionsville. Okay, remember that's what Representative Thompson's been trying to do for years, is give each municipality the right to create its own income tax rate, and the state database can't do it yet. It will probably, hopefully, in a couple years. And so the amount of property taxes that you levy is the amount that you get. So if you levy, in essence, 8% of the total, you get 8% of the income, regardless of your population and regardless of your income. Okay, so it is truly the county as a whole. So if you have a neighboring community that's growing by gangbusters, they get something called, I'm sure you've heard of, an annexation appeal. Okay, we always tell everybody, we educate our clients that if you do an annexation, be sure and do a proper fiscal plan. And Adam knows, and his firm knows, what a proper fiscal plan is. We've seen in the past that annexations, what people have done is said, oh, we're going to annex this, we're going to annex this territory. And I know because of your consolidation and stuff like that, you're a little unique, but if you annex this piece of property and it's very, very small in relationship to the entire city,
We like to look at it as an incremental cost approach. Okay, each little annexation, be it small, be it voluntary, be it involuntary, which is very, very tough, it will add an incremental cost to your budget. Okay, each little increment adds up. Okay, Whitestown and some of the other entities have been filing annexation appeals. And what we do is we say, when we look at this, we say the revenues, let's say, I'll just make up an example, are going to bring in $100,000. And what we do is when we do our incremental cost approach, usually what we'll do is we'll say expenses will be about $90,000, assuming they're well-priced homes, they do pay for themselves. Okay, then what happens is we do this each and every time in Westfield. And then what happens is this 90,000, remember this pie I told you about LIT? Okay, this pie, once you go down and file your annexation appeal, this little piece of pie will go up by $90,000 in levy, which may pay you, let's say, may pay you $30,000 in income taxes. Okay, so if you're a growing community in the county, counties can't do this, but cities can. They annex, and we do it. I have an annexation every month, at least a couple every month in Avon, Indiana. Have a couple every month in Westfield. And so we're growing our base of AV, we're growing our base of property taxes, and then what we're doing is growing our base of LIT. There's not too many other ways to do it.
Are they physically annexing land to do the annexation appeal, or is that just a mechanism that they're using? Like, are they annexing neighborhoods and land in order to then file that appeal to get that bigger slice of the pie?
Almost everything. Most of the time it is a cornfield that's going to become a subdivision. And by the way, we take, if you isolate your annexation appeal and say it's a cornfield, it's not going to give you anything. But we really sit down with the developer, and we're doing this up in Cicero, sit down and say, here's what it's going to cost once this subdivision comes in, and we want to match the revenues and the expenses. Okay, if you don't do that, you're just going to bring in AV and drive the tax rate down, which means you'll still get the amount of revenue, but you won't get any more LIT or auto excise or anything else. Okay, so you got to have an overall. Remember, I told you on that. I'm going to call it the webinar. The webinar, I told you got to have a 3 to 5 year outlook, because this ball game is working against you about every other day. Okay, if you don't really have a grip on it. Okay, so now let's go back to our revenue. I told you that what's going to happen, and this is going to be a speed bump for us. There's no doubt about it. This is going to be a pretty big speed bump. Now, you guys have a concept, council has a concept of a balanced budget. And boy, do I deal with this around the state of Indiana constantly. Balanced budget, I'll agree with everybody, is revenues minus expenses. The problem we always run into is expenses sometimes exceed revenue, okay? And now the question is, are they going to exceed revenues for capital? And you're going to find in Westfield, yes, they are. This year in 2022, we're going to exceed revenues by capital because we're going to do a controlled spend down of our cash balance. Okay. Notice I said a controlled spend down. What does that mean? That doesn't mean we open the floodgate for the next 3 to 5 years. What it means is we're going to deal with this on a year by year basis and look at how much we want to draw down cash. The most unbelievable thing to me right now, I guess I'm pretty conservative with my money, is that people can't stand money in their pocket, especially municipalities. Now, the other problem is that they also have wage pressure is enormous right now. I am doing more matrices and more more wage studies and things like that, and half of them I'm tossing out. But the wage pressure is enormous, not only in municipalities, but everywhere else. Okay, and so number one is priority is giving a payroll increase. I think that's going to probably have to be ours. Now, let me go to the property taxes. Am I boring you to death? Is this making some sense?
That makes sense. It's a little boring at times, but it's okay.
Pardon me?
It's a little boring at times, but it's okay. Helps
Okay,
with
I'll
the
try.
general picture.
I'll try and liven it up. Okay, let's go to property taxes. Anybody understand what that's going to go up? How about 4.3%? Your first biggest source of revenue is going to go up at least a positive 4.3%. Now, the good news is, good news, bad news, that's one of the higher ones that we've had. Okay, why? Remember, the growth quotient on property taxes is based upon the man on the moon. Not really. The growth in property taxes is based upon the rolling non-farm payroll over the last 60 months. Now, there'll be a test on this later. So that is updated each and every quarter, and non-farm payroll. So what does non-farm payroll have to do with the increase in property taxes? Not a lot, but that's what was chosen. There used to be a discussion about creating actual growth quotients for each county. That was a 92-page nightmare. And then, so they scrapped that one really, really quick. And they went back to the state growth quotient based upon the non-farm payroll rolling 60 months. Okay, so it means it's always going forward. Well, guess what's up? We got rid of a couple years ago. You might say, well, Greg, it was about 3% a couple years ago. Yes, that's because it had a couple negative numbers on it on the downturn. Now with wage pressures, probably the growth quotient on property taxes, unless somebody changes it, is going to be up in the 4%. Okay, so you've got a +4, a -5, and by the way, we calculated, Tammy, the +4 was for property taxes on the general fund was how much? I've got it here someplace. I think they're basically a direct offset. 550. Okay. I gotta keep moving my markers right now. Okay, 550. And LIT? Pardon? 636. Sorry. Okay. Sorry, I have allergies sometimes. Affects my ears. So we've got minus 600 plus 600. We're about in the same spot on revenue. Okay. Now, point well taken, subject to a reconciliation or a true-up. But that may not be coming to a theater near you until about April or May next year. And notice I said May.
Our communities, Westfield, for example, you mentioned was down in lit. Are they up in property? Are they seeing the same offset, or because they have a higher commercial basis that offset with the property greater than the lit negative? Does that make sense?
Yeah, it makes total sense, but I've got to educate you again, and not on annexations, but about annexations. So about maybe now 7 years, maybe 8 years ago, Westfield did that major annexation. You know how Carmel and Westfield were trying to collide? They did a major annexation in the southwest area of Westfield. Mayor Cook came to me and said, if you were king for the day and wanted to change something in the statute, what would you change? I said, aha, one thing. And he said, what's that? And I said, the growth quotient. The growth quotient we're running at is around 3% on property taxes. Your AV growth is running about 12%. If you continue to try and fund 12% growth with 3% growth quotient, this is the growth quotient, okay, where will you be? you'll be basically, you'll be running, you'll be chasing this for the rest of your life. You'll never catch up. Okay, so he said, okay, what would you want to do? I said, if we have something like this, then our growth quotient ought to be something like this. Okay, matching. Now, what does that mean when you have new AV come in at a 12% growth quotient? You get your raise your revenues 12%. You have a matching of accounting. Sorry, we were having a matching of of revenues with AV, and therefore expenses, because we knew the expenses were going up 12%. You need more police officers. You need more of this. You need more of that. You need that. So you have to keep the ball game. So what we got was, we got the statute changed, and there actually is a 2-tiered growth quotient now. The 2-tier is most of the non-highly growth people are 4.3 this year. We will grow. Everybody Representative Buck put it together for us, and we got it passed, and then everybody's been trying to torpedo it ever since. Okay, it's been helpful. It's what Whitestown's been using too, by the way, very, very aggressively. It's going to help me maybe in 3 places this year: Westfield, Whitestown, and Avon, Indiana. They grew 16%.
What's the minimum threshold to qualify?
Here it was. It was at least in 3 years having something less than something more than the growth quotient in consecutive 3 years. Now they have said that your population from the last census to this census has to increase by 150%. Now, state's great, and I don't hold it against them, but someone is now interpreting that 20 needs to go to 40, and 40 needs to go to 50. So your last census needs to be 20, and your next census needs to be 50. That's outlandish growth. I don't think that's 150% in our view. So at this point in time, your census would have to grow that. You don't qualify. It's my
Even with the reorg, I mean, if you look at our 2010 census and then we did the reorganization, I mean, our population almost doubled with the reorganization. We've grown since then. Have we looked at what that number is?
Okay, how about I'll take a look at it. I don't
Do.
know, but Tammy could probably do that by now. Over the what was the population in 10 before and now with the larger area?
With the reorg,
With
because I think the population was only like 12,000 in 2010 and now it's
Wayne
30
can answer it.
because of the reorg.
14 and 29.5. 29.5.
Yeah, so by the definition of 150, which we don't agree with, and I'm gonna take it to the max.
I don't agree with either.
And yeah, and I'm even I'm gonna propose another statutory change. If that's the case, an interpretation of that 150. And by the way, it seems as though certain analysts become king for the day and get to interpret things. And I don't like that. I think there was an I mean, come on. If you grew that much from 50 to 100 or from whatever, then you ought to be able to. So you bring up a great point. Hey, and I'm also willing to try anything at least once. All I usually do is get a no. And maybe you know what, HEL, no. But you know, that could be.
Well, I'd like to try it. I'd like to, and Adam, maybe whatever we can use within our law firm to talk through that, because we are in the same boat. We can't keep growing at 10% a year and having 4.3% growth quotient and we're seeing that then in the services we can provide.
Yeah. Now your AV, and help me out here, because your AV only grew 5-point-something%. Okay. And so this year you did not have, I'm going to say around 5.4. So your AV grew 5.4%, roughly. And so you did not translate into a 10% growth quotient this year. So historically, I've got it in my numbers here in my sustainability, I've been looking at it. And do you know what it's been historically?
AV growth?
Yes.
I don't know what that's been.
Okay.
I'm looking at Wayne, but I don't know if he knows off the top of his number. Now we're looking at Tammy. Everyone's looking at each other. And maybe it's not that high, but there's a lot of pretty high dollar project coming online here that
Yeah.
it just feels like we're always getting screwed. We donate to the county, we donate to the state. Like, I want some of this money back.
So your AV growth in 18 appears subject to check, 6.6, 19, 3.5, 20, 5.76, 21, 610, and 22, it's 521. It's 521. So we'll have all this in our sustainability. So I said, I'm corrected. So you've been about 5 to 6 to 7% growth at best. Now, Mayor Shelbyville can't believe he's only growing at 3 or 4%. So he goes over, I told him 5 years ago, go over there and sit with your county assessor, make sure the databases are right. We're now running a database on values be both home, commercial, and retail. And we're seeing what those percentages are increasing. And guess what? We're tracking right behind the assessor to make make sure we have found things that have not been on, and we have found some bumps in the road that we've had to correct. So it always pays for you to do a deep dive and pull a database down, have to do a database analysis and check your AV. Okay, because things happen. The worst thing you can do when you do a TIF district is let that thing become a fine wine and never review the parcels because they get dropped all the time. Okay, so
Is that something, I know that our finance group is a lot on their plate. I assume you're not doing that today, Tammy. Is that something we can start doing?
We have not done a structural analysis, but we do have when we get our settlements and there's a fifth thing or something like that. We have an issue where we establish that we expect it to be generated, and then we have to go back to the county and then request that money. So on a high level, yes, we are tracking and we are seeing that we need to make corrections, and we're constantly.
and I want to do it on the city as a whole. So
And is that something, if we could spend 100 grand to do it and get 300 grand out of it, I'd spend that money in a heartbeat.
exactly, but there are no guarantees.
No, I understand that, but
You know.
based on past performance, I'd be willing to listen to
I think, yeah, I think number one, you gotta stay up on it, and the pressure, once you do, the pressure kind of gets there and things don't get missed as often later on. So there's some preventive medicine and there's some immediate medicine.
Yeah. Okay,
Okay, if you understand what I mean.
I do. We can talk offline,
So,
Tammy.
You know, that's the important part, because, you know, this is our engine to ever achieving down here, but you only appear to be in what I call, you know, you're above a lot of people, but you're in that middle.
We're stuck in the middle.
Yeah.
Yeah.
You're stuck in the middle churning water.
Yes.
Okay.
So let me ask you then, is what Mayor Cook asked you, if you were king for a day in Zionsville, what would you do?
Number one, I think the growth quotient ought to be tiered. First of all, the 150%, let's scratch that. The growth quotient ought to be tiered where you are allowed, you know, maybe tier one is the growth quotient of 4.3. The growth quotient for these big boys that are growing by leaps and bounds, like you said, Avon 16%, you know, that may be one of the leaders this year. I'm just kind of surprised. I haven't seen White's count now. And so having something in between so you can match your revenues and your expenses. Okay, and things like that. Then I guess, and remember, I've only been doing exploratory surgery on you for about 6 months now, or 3 or 4 months. So I'm not deep in your weeds, but I can be your best partner in partnership. Okay, and things like that. So you just gotta tell me where you want to go, the mayor and you as a group. Remember, I'm a big, everybody's a stakeholder. Everybody's got to be all hands on deck for anything that we propose to help us in the future or in the past. We all got to work as a team. If we're not going to work as a team, we're going to churn as much water as we were before. Okay, so that would be one right there, and I think you hit the nail on the head. I want to go back. I drive around Indiana all over. I used to all the time. Now I just Zoom all over. But I want to think about, you got the income tax problem. There's no doubt about it, or challenge. I learned somebody gave a town $500,000 if I quit using the word problem. So I call it a challenge because they got the 500. But it's a challenge. You've got the income, but you're not reaping the benefits. Okay. Now, unfortunately, probably the only way you could correct that is with Representative Thompson's income tax specific to a municipality. That's a little ways off, and that may be a political nightmare to a certain degree. Once we get that tool in the toolbox, that's going to be a really tough tool. You got to be careful with it.
And is that proposal another tax on taxpayers, or is it just recouping more dollars taxpayers spend at the local level? I don't want to tax people more.
The way I've always understood it is taking the current income tax. If I've got it in here in the sustainability too. So let's say it's 1 1/4 in the county. Everybody gets to start at the 1 1/4, and then you get the ability to increase from there. But keep in mind that the expense component in the statute says 2.5%, so you can never go higher than 2.5. Now we have food and beverage here, so that's another tool in your toolbox. And so being able to maybe implement other things like economic development agreements and things like that in the future is something you want to think about. And so, because why? Guess what? What did I tell you about here? Remember this? We're going to have a test on this later. I said we got it. We've got 3 sources of revenue, right? We already heard what's happening here. We already heard what's happening here, and right here is going to matter for everybody in the future. Okay, and that's all those auto excise that's growing your population. Auto excise is based upon the levy, based upon other things, your tax rate. Being able to grow your miscellaneous revenue. Boy, wouldn't it be nice if we got more than $1 of interest income for all of our Zionsville money. And we've done something about that. We've tried to do the RFP and all that, trying to earn more, but we need Janet yelling to yell interest rates are 3%, and then we'll all be better off, at least us savers. Okay, and that's the way I'm looking at it, is from an interest income standpoint. If that came back to where you were, I've got that detailed too, that would have some. So our basket of revenue, and I met with the department heads, and I heard need after need after need after need. And I'm not here to arm wrestle with them, because I think they're there. We're going to have a little challenge on the revenue side. Okay, a fairly big one. And so miscellaneous revenues, maybe a couple 100,000 there if you want to depend on it. And I'm not meaning things like the supplemental LIT. I'm not depending on that. Just can't. It's one-time source of revenue.
Is that 200,000 an increase or 200,000 as a total revenue?
I'm going to say increase, and that would be food and beverage, some things like that, auto excise. Fire chief's doing his job. Planning department's doing their job. All making sure all those fees are up to date and things like that. The last thing you want is your planning fees to be older than 2 years, because everybody's changing. And we got to pay for that department. So that's what's happening on the revenue side. And notice why I wanted to spend so much time there. Okay. So on the expenses, Tammy, do you want to kind of we want to go kind of over a little highlight on what the expenses. The main ask is for 4% payroll increase, correct?
I mean, if you're going to talk, just so people online can hear, appreciate it.
You know, I've had COVID, I've had shots, I've had everything.
So last year during this budget cycle, we came to council and we wanted a 3% increase for staff. What we settled on due to the revenues not being where we wanted them to be was a 1% increase for staff. So in addition to what Greg refers to as the market basket of increase just across the state, then we would propose that the 4% be a catch up from last year, as well as try to make some headway towards just the general inflation.
Because what did you give last year? That's what I thought I heard. And so that's what, you know, I cautioned everybody, a lot of people didn't give anything. And now they're playing catch up. 3 to 5%. I've got some outliers at 6 and 7. I've got some counties are going up 18% for police officers. Police officers will have an enormous pressure even on cities going forward, and if you can even get one. And that's the biggest thing. I've seen people getting 40 candidates and they boil it down to 1. So you know, that's what I mean by the wage pressure. And do we want to talk about the true rate of inflation? Has anybody gone to Kroger's or wherever your favorite food store is? Guess what? It's not 2.5%, is it? It's not 4.5%. And it's going, you know, what I call the true market basket of inflation is more about 10%. And I kind of sit down and do my own calculation. Their electric bills, I work with the 5 biggest electric utilities in the state of Indiana. We're going, the cost of gas and all of those are going up quite up. They're going from $2 a decatherm to $5. And so for this winter, so your electric bill, there isn't a thing that's not going down. That's not going up. So you know, we said that. Now I also know that, you know, there's police officers needed, there's firemen needed, and things like that. And you know, fire personnel, I should say. Sorry, Chief. Old days. So you know, those pressures are coming, but there's no doubt that right now we're at a level where it's kind of like the demand for services is outstripping the revenue. And that's kind of a phrase I'm using. The demand for services are outstripping the revenue at this point. We have a little speed bump we got to get over here. Now, do I believe that, you know, Boone County is going to stay down at a -4% or in income taxes? I think this is where you bailed. I can't say enough about cash balances. Cash balances are very, very valuable and very, very important. Moody's and S&P, you know, says a minimum of 25 to 30% cash balances. And like I told you, the biggest thing going on in the state of Indiana right now is we can't stand cash. What, you know, people want to spend it. And so you do need to maintain at least 25 to 30% if you want to, 30%, if you want to maintain your credit rating, which asked a few people recently that got, you know, Plainfield got downgraded for a couple of reasons. But one of the reasons you got, by the way, the team should always work together. That's an important point. And so, you know, those cash balances are important. Now, when we look at CCD, we don't necessarily need cumulative capital development fund. For some of you that I use those terms, CCD, you don't really need 25% in there because you're scheduling CCD, human capital development, for your leases, for your equipment, for your purchases. So that should be a 5-year capital improvement plan. Okay. And that's what should play into the CCD. And then you don't have to keep a bunch of extra, but you sure in the heck need to keep your nickel And we did that. We did a reauthorization, and thank you for doing that. You gotta keep your nickel each and every year. We tell everybody to renew their CCD rate January or February, because what happens each and every year due to the trending of AV, they will drop that nickel down, keep going down by the trending of AV. If AV goes up 6%, they'll trend it down 6%. 6% of 5 pennies may not be a lot, but you lose that not only on your entire AV, but any growth in your AV. So you lose it on your 6% too. That's not a good play. Okay. If you go to AIM and you talk to, or you go to one of your county people, don't get confused. They have 3 cents. They don't have a nickel. So you want to keep yours at a nickel and keep it always there. So you get it on current growth and future growth. And I like to say, we try and keep the best thing you can do is keep your tax rate stable. Okay. I think whipsawing the taxpayer up and down and all around is not good. I don't like it as a taxpayer because I pay mine right up front. And so, you want to be able to budget those numbers. And if you're going up and down and all around, doesn't help. So we like to say, keep that tax rate. In Hendricks County, keep talking about 33 pennies. Keep your 33 pennies. And here you've got your total tax rate. So, the expenses of 4% payroll, school resource officer, that was really high. I think we're going to be down to is really prioritizing our Form 1 budget ordinance expenses, prioritizing those. And, at this point in time, I'm not looking for too much more information. So I think Tammy and I can give you, once we get the rest of the Form 4Bs, I know she was working hard even over the weekend, because I was in the office over the weekend and we were emailing back and forth. And I think we've got a real good start on Gateway, and we're going to be able to hone in and give you, I keep trying to find some better news, because I talked to the department heads and I know the demand for services that are out there. So I understand that. I think, as we move forward, I like to, additional appropriations or capital items. I guess I'd like to spend a moment on that. Capital items, I like to say, if you want to, and I've seen this, I've seen people say, the only way we're going to do, we want a balanced budget. So we want our operating expenses to match our operating expense, our operating revenues to match our operating expenses, exclusive of capital. Okay. And so we take the capital out, and then I divide the capital into 2 components, one time, and then what I call kind of pay as you go. Okay. So pay as you go, I say, for instance, CCD, that comes out of CCD. Okay. So you build up your nickel, you have your nickel each and every year, you pay for your capital items at the nickel. As far as I'm concerned, sometimes CCD might grow by $1 million, and then you might expend it down by $2 million because you had a $3 million balance and you're expecting $1 million in revenue, and you had a $3 million balance. So 1 year you might say, I need to bring in 2. I call that an increase in the pay as you go. Okay. I don't call one time, it's more something that you might bond for, something you might appropriate cash on, what I call the controlled spend down. And you might say, I want to bring down food and beverage, or I want to bring down general fund for this one project. And I think you were trying to think about doing that on the park project, if I'm right. But remember, your general fund monies are so important, and cash is king, I like to say right now. And it's very, very important. And we want to be very cautious about, you want to be very cautious when you do a controlled spend down of your general fund. Because guess what? You might have a revenue going up 4% and a revenue going down 4%, and you may have to address certain expense needs. And so that's what your cash is there, and you want to always have that for that. So you can decide if this is 1 or 2 bumps in the road, but that's one of the very, very important things. And getting back to the revenue thing, for instance, you have a sewer utility, you don't have the water utility, but you do not do a payment in lieu of tax from the sewer utility. Okay, payment in lieu of tax has been around for a long time. Even the IURC, when I got involved in Boone County versus Valenti Held and kind of opened up that whole sewer area, payment in lieu of tax is PILT, known as PILT, and that's basically where you charge some based upon a formula calculation of the estimated AV of the sewer utility. We do that all the time, times the tax rate, and let's just $5, $1.50. Then you basically have a payment in lieu of taxes of $100,000 or whatever, and that goes to the general fund and helps support the overhead of the mayor supporting the general or the sewer utility, council dealing with sewer utility and things like that. So that's an old concept. IURC's granted it many, many years and is one tool in the toolbox you're not using. So there's some things like that, an allocation of payroll and things like that, keeping your golf fees up. I know the golfers won't want to hear that, but there's some things that we need to kind of set down as a priority to look at I call it fine wine in the miscellaneous revenue section, and making sure there's not a fine wine that's grown really good, but it's because it's really cheap.
Hey, Greg, you talked about appropriations, and we did and have taken that approach.
Additional appropriations.
We have taken that approach, that balance of taking, proposed deficit spending and balancing it and then doing appropriations. You said cash is king and appropriations go against the balance. I feel like every time that there is a request that comes before this council for an appropriation from the administration, the answer is, well, we've got plenty of money, no problem, huge balances, we can afford this. So it's concerning to me or confusing to me that I feel like every time we're asked to write an additional check for a one-time thing, we're told that we have plenty of money. But then here in this balance or in this budget presentation, you are pragmatically cautioning against spending much money right now because of some of the concerns with the lit. So how do I reconcile that?
Well, I don't think I went that far. What I said was, let's do a calculated control spending, okay? If we, the pressure for 4% is enormous, okay? If we consider that a one-time spending, or if we consider that a one-time speed bump, that our income taxes will increase as we go, which I think, that's fairly, I'm comfortable that it's going to come back. Then it's a controlled spend down. And for instance, I believe in 2020, you had a whole year's budget just in the general fund in cash. That's 100%. That's not 25%. That's 100%. And so you are comfortable in your position. Notice I didn't say extraordinary in your position. I've got some people that got a tremendous amount of money, but there is I'm going to agree, there is a nice balance. Okay.
So, all right. So let me then, if we've got a nice balance, why is there so much detail or concern about being down $500,000 in revenue if we think we're going to bounce back? I feel like I get mixed messages. Like you're now telling me
I'm not trying to give you mixed messages. What I'm trying to give you is the complete story.
So should I be worried about the dip in the budget, or should I look at it as this is just a blip? It's going to come back. We have plenty of money in the bank, so let's go ahead and do what we need to
I
do.
think that's what I'm charting your course. Okay, I believe we do have strong balances. I believe we have them to weather our storm. And now I'm putting together the sustainability to look out 5 years. And here's the next tool we need in our toolbox. We need to look out 3 to 5 years and see what do we need in order to achieve this, and what would be the controlled spend down of the cash balance. And guess what? That's what I'm working like really hard in the back room. So Tammy's getting the 2022 budget. We've got the 2021 budget. We're going to be projecting forward for the next 5 years. I do not see you even at, you might be 50% in 5 years with certain assumptions. Okay, so I'm saying it's not a red light. It's not a green light. I like to use the racing analogy. It's a yellow light. Proceed with caution. Okay, gave you the complete story so that when you get the sustainability document, once we get the 2022 budget kind of pinpoint, we'll also know where we're going out there in the future. The worst thing you can do is stay with the state of Indiana's 18-month process. They'll tell you that'll only get you in trouble. Okay, so I'm setting you up on what we need for revenues, or what we're seeing in revenues, and what we then need turnaround in the sustainability, which I think we'll see that.
So,
Does that help you?
yeah, I mean, you mentioned that municipalities have a tendency to spend $1 in the bank. I don't have that urge. I'm happy to save money for unknown times like now. So will we see that sustainability piece as a part? Will we see the budget today?
Doesn't sound like it.
We have our next budget workshop scheduled for October 1st. And at that point is when we will have sustainability with that lookout. As Greg mentioned, we are gathering information every day on revenue projections and that information that is critical to the sustainability plan. With the municipal finance and how this information comes in, one day we'll get great news and we're up, the $1.9 million. And then the next day we'll get news that our lit revenues are down $1.9 million, right? So it's an ongoing process that we're working through. The budget adoption is on October 18th as the adoption consideration. And we do have until November 1st to adopt the budget. So we do still have time to get all this information. We will go ahead and publish the Form 3, which is the overall, we will not exceed these budget amounts and these tax levy amounts. And that will be on September 24th, and that'll be on Gateway. And I'll also send a copy to council. And then we'll work within those numbers to work on the detail that will also be presented in the sustainability plan, as Greg mentioned, which is super critical, that we're not just looking at 1 year in a vacuum, that we are looking out and watching those cash balances and what the decisions that we're making today will look like in the future.
Got it. So I appreciate, Greg, your background. Am I mistaken when I thought the budget presentation was going to be like the presentation of the budget? I mean, the topic here is budget presentation. This is more education on how the budget works.
Correct. This is setting the stage. And I had talked to Amy Lacey, and the budget introduction as your first reading would occur on the public hearing date, with the second reading on the adoption consideration. This revenue news kind of made us relook at the information that's being presented. We didn't want to present more than what we absolutely needed. And so we do need additional time to go back and talk to the departments internally, and then come back with those detailed Form 1s and project them out in the sustainability plan.
Tammy, how much time will we have once you are able to present the final budget to us to adopt that?
Yeah, so the budget, the information in the sustainability plan will be available on October 1st. And Amy will also set up the round 2 meetings with the council liaison and the departments for next week before that October 1st date. So if there are any comments and feedback from council on those individual budgets before we get to that sustainability plan, then we would have time to work on that. So you'll have the sustainability plan in hand on October 1st. And right now on the 18th, so 18 days would be before the earliest that the adoption consideration would be. But if we need to, like last year, we had another meeting on October 29th, which is before that November 1st deadline. So we could absolutely have a special meeting to adopt the budget if you do not have enough information on that October 18th meeting.
Tammy, I get the current, they get the newsletter that comes out every day and they sort of talk about what's going around, mainly the northern suburbs. For the last month, I've been seeing stories of mayors coming and presenting their budgets to the councils. Why are we not doing something till the 1st? Like they must have the same revenue concerns or unknowns as well. It always seems like this is such a compressed timeline for us.
I can't speak to the other communities, but the departments could, at the October 1st meeting with the liaison and everything like that, be able to present at that time as we did in previous year.
I guess my understanding was this was through email communication. This was supposed to be a high level budget presentation. And what I struggle with is, since 2017 being on the council, with the exception of last year and this year, we have had department asks and requests by August, regardless of revenue. Then we dealt with revenue as we needed to. It just seems like the requests, the needs, the budget is a really, really difficult ask.
So if you recall, we did have a meeting earlier on where Greg alluded to that we had that Zoom meeting where the departments did present their requests for the additional personnel and additional capital. And we did go through all of that earlier.
Yeah,
yes.
I agree. We had the request for the additional stuff. Where I'm struggling with this, number one, is my understanding was this was supposed to be a budget presentation. And two, again, it seems like we should have whatever the fire department wants now, because you guys have seen it. I mean, Greg sat up here and told us that he's seen it. Like, what does everybody want now, line by line, what they want? And if it's over, it's over. And then we just work out everything. I guess I just don't understand why we don't have that info. Am I missing something? Did you expect that, or am I out of line here?
I thought that's what we were getting today.
Man.
Any other questions, counselors? Greg, is there anything else to add, or Tammy, anything else to add?
No, sir. I think that's it. And I think keep in mind that, on the budget, there are a tremendous amount of ask. And I think what Tammy's been in the process of doing is she's got to bring it down and bring it in the wish list. Remember, it's the mayor's budget, and we got to get it within the confines of that.
Well, I think it's also important as the fiscal body for the town of Zionsville to understand it's our budget as well. So if there are things that departments want, whether all of a sudden the police department triples their budget, I feel like we should know that that's a request that they have. Okay. Like, I feel like we should know this information, and we're not getting it.
Well, it shouldn't be that hard, because in reality, this is every budget in every company and every municipality ever. It is, this department has unlimited wants. They want $10 million of things. And there's a demarcation line that says you can afford up to this point, and anything below that falls off the list. So I would think it would be pretty easy to say the police budget is expected to be $2 million. Chief Spears wants $2.5 million of things. There's $500,000 you can't get. If it turns out it's 1.8, there's another $200,000 in things he can't get. And if it's 2.2, there's $200,000 more that he can get. And there you go. If the revenue number is sort of waffling up and down, it just waffles up and down what the needs are. And then we can determine and say, well, we're actually going to give you an extra $500,000. We're going to go into deficit. You can get those things. because you've made that case.
Right.
I just feel like, I don't understand why it doesn't work that way. It just feels like
And
we're
we
in the
did,
dark.
when we met with the council liaisons, the department had the council liaison and finance, they did present their total budget. During those meetings, their current service level as well as their additional requests. During those meetings, with some of those council members, we got feedback that should not be, some items should not be proposed as part of the budget. And that was the purpose of having those meetings. And Amy's scheduling that second round. So I believe the council liaisons do understand the full request of what the departments have requested. And then, as Greg mentioned, then our job is then to make it work within the revenue and to look at the sustainability plan and to make cuts ourselves on between the departments, that the departments can determine some of those priorities on, we're going to hold off on this year on this personnel, but next year, and kind of talk internally on that and present that.
But some of that stuff might be relevant to counselors. Like some of that stuff might be important to our districts or to the stuff, the folks that we represent. I guess my question is, why is it a secret? Why can't we have what you guys have? Why can't we get, if the fire department wants a tanker and you guys are pulling that tanker out, or they want to do something in Perry Township and you're pulling that out, Craig may be passionate about something in Perry Township. Like why do you guys get to see what the requests are, but we don't get to see it until you guys scrub it?
So operationally, the administration is looking on how to provide the services and
what priorities, right?
Well, I guess I understand that, but my point is like, if I'm doing, I guess I don't understand why you guys, again, it surprises me that you guys would not want to share and disclose this with all of us so that we can work together on what each department wants. You guys have the answers. You guys have the requests, the wants by each individual department head, and we don't. We got, to your point, in my meeting with the fire department specifically, I got 4 bullet points on high level in addition to last year. That's what I got. I didn't get the total budget. I got whatever last year's budget was plus this year. I didn't get line by line for last year. I got whatever last year's was plus this year. You guys have that information and that detail. I don't understand why you wouldn't want to share that with us, so that we can help get to, am I missing something here?
No, it's the same thing we went through last year. It's the exact same thing. And last year was new system, new administration. It's the same thing. It's frustrating.
yeah, so I mean, we can provide the grand total of what the departments originally requested and then what our recommendation is.
So if if Chief Spears sent in his request for his budget to you, was it just a number? Was it just $4 million?
It's a working budget. So we have a budgeting platform and we revise it based on how we react to the revenues, right? So
money's there. You send us a spreadsheet with money this weekend, like, why? I get frustrated because it seems like this is something, easy things should be easy and budgeting is easy. Like, we should know what you want, what the expenses are for each department, but we're kept in the dark.
So we were under the impression that a balanced budget is what the council's expectation was.
That is a true statement.
I would agree with that.
And so we're not going to propose a budget that is millions of dollars over that.
This year, I mean, that's what
Right.
happened last year, right? I mean, last year it was millions of dollars over and we had to go working with council and the administration to pare it back.
Correct.
That's what I'm
And then
saying.
it was,
Why don't we work together on this?
and then it was stated that a balanced budget is what the council wanted to see.
Agreed.
And the revenues are not there.
But we don't know what the expense requests are either. I mean, that's the thing. Like again, if we knew what the expense requests would be, then maybe we could look through this and say, listen, this isn't a priority for my district, whatever this is over here. Maybe we take that out, we plug it in and we put it over here. Like, I don't understand.
Well, we'll have, like, we're probably not getting anywhere here. I guess we'll have that opportunity when we finally see information on the first.
Now, I just have a quick question for Greg, and that, because you work with so many, hey, yeah, Greg, you work with so many municipalities. You got a lot more experience than certainly I do. You made some comments I really appreciated in terms of you see this as a team effort, that everybody really needs to be in the kitchen working together on cooking this up. It doesn't really work when you're not communicating. Is this what you're hearing? Is this atypical of the process between the administration and the council, where it's really, more of their responsibility to work out the details and then bring it to us, and we have a couple of weeks to kind of ask some questions and approve? Or do you feel like in other municipalities, the council is, really partially helping to create all this through a shared vision and through more conversation? Again, this is my first real go around doing this. And so I don't know what the expectation is, but based on what you said, it sounds like there may be more collaboration happening in other communities.
Well, first of all, I hear you all loud and clear. And yes, there was maybe a misdirection in the balanced budget. I'm used to everything. I'm used to a mayor putting together a $50 million budget and only having 25 to spend. A matter of fact, I have one city where the mayor said, that 1.5% that council wants, I want it to be 5%. And last week we were going up to 5% increase. So, it went the other way. So I'm seeing a little bit of everything, especially this year. But I guess Kimmy was under this understanding that you wanted a balanced budget. I think the route that she was trying to take was get the mayor's priorities within the balanced budget. What I've heard you loud and clear, you'd like to see the entire package too. That's also common. It's also common, the path we're taking, which is the mayor presents the budget and says, here's the priorities and here's what we'd like to fund. So I guess I would say in the 20 plus years of doing this, I've seen a jump ball of everything. Okay. So I guess what we need to, as working together, what I meant is sending the right signals as we go forward so that we can meet everybody's goal. And that's what Tammy's been trying to do. But there was maybe the too much emphasis on the balanced budget at this point in time, thinking that, you may not want to see the bigger. So that's fine. I hear you loud and clear.
Yeah,
No, I think,
Real quick,
I think and I want to applaud Tammy and her team and the mayor's office for keeping our priorities of a balanced budget in mind. That was great, and thank you for that. And where I feel that listening to the rest of council, where we have fallen a little short, is that we've gotten the priorities of the mayor in this budget, but what we haven't done in these meetings is determine the priorities of council. Because what I'm hearing from Jason and the frustration of Councilor Plunkett and Councilor Garrett and the others is we haven't determined what the council's priorities are in formatting this budget. For example, let's say council's priorities are, we have determined that the fire department and police department, the officers that work in those departments are underpaid and we're not as competitive in those, and we'd like to see those salaries increased. So that's a real conversation we've had. So if that's a priority of ours to do that, we need to reformat those salaries so that we can address that from a revenue and expense standpoint and build that into the budget. But we haven't been afforded that opportunity to do so. Am I kind of going down the right?
Well, I think specifically for me, the reason I hammer so hard on a balanced budget is because we don't know what's going in it.
I understand the balanced budget. I'm just saying
That's
that we have our priorities on what we'd like to see in the budget too. And this has been as much as what you have gone to is that you have taken to heart our highest priority, which is a balanced budget.
And sustainability.
But I think that what we haven't passed forward to you and is that there are other priorities that we have that we want to know more about what we want to place in the budget. So we need an information from the administration about what was it the departments asked for so we can help determine what that second round is.
And see, I see those kind of as the one we had, by teams. I kind of expected more interaction from the council on that, saying, that's not going to be possible. That's not, and here's kind of what we want to see. So what I am usually used to is a lot more interaction, even during those work sessions. And that's what I think I guess I didn't hear or didn't have. And maybe Tammy had it during the liaison meetings, but I don't know that.
And maybe that's where we kind of broke apart, because in the conversation afterwards, and I can understand everybody's frustration, is one of the things in my mind to use as a real example is the question of are our fire department and police department officials underpaid compared to our neighbors, and should we be increasing those? That's an example, not something.
I just want to address that really quick. Last year in the 2021 budget, when we presented it, we did include a parity for the police department and the fire department and gave that increase. And we have since then done the compensation study that shows the mid, and max, and bringing everybody up to the minimum and then being able to move them forward. So I just wanted to address that we are addressing compensation in public safety as well as the rest of the staff.
Yeah, and I appreciate that, but I was just using that as an example of, and I think that kind of dialogue back and forth for whatever reason got lost, and we're just a little frustrated in that.
So, and I just want to clarify one thing you said, Councilor Choi, which was you sort of implied the only thing the council has given as a directive is a balanced budget.
No, sorry, I didn't mean to imply that.
Okay, just so the public is aware of the process is councilors came up with their own priorities for the town and submitted those, and then each individual councilor was responsible for conveying those with each department head. And then some were put in the budget, some weren't, and that makes sense. I think what we haven't seen then is, well, how did that shake out? And to Councilor Plunkett's, Vice President Plunkett's point, if it didn't shake out in a way that maybe there was a huge priority for us, well, how do you make that up, right? Is there something else that was another priority that needs to be not in there? Do we need to spend additional money to convey that priority? That's the dialogue that we're missing, and it starts feeling like we get crunching down to, well, now we've only got a month to do all this stuff, and there's a lot of moving parts. So,
no, I didn't mean to imply that. I said what I meant to say is that an all important aspect of what we wanted was a balanced budget.
For sure,
but
absolutely, and sustainability.
And ultimately, my goal is to help the city as a whole put together, get the interaction, get the best budget now and going forward, and keeping your eyes wide open, because technically in the sustainability, we're going to have the next year or two budget kind of set out. And it's going to start giving you a roadmap. I think doing this 1 year at a time creates a lot of anxiety.
Mr. President, can we check with IT to make sure that everything's running
Joe told me we went down for 2 minutes and we're back up in line.
You're back online. So we missed probably Counselor Plunkett's comments. Is that what we missed? I think that's important for the public to know. I'm concerned about that. That was a different part. Okay, I just want to make sure when we signed our electronic means of communication, I just want to make sure that we get that out there to the public when we are on Zoom. And this is an example of one of the reasons why I think that we choose to make sure our counselors are here for the meetings as well. So I saw that miss and I was concerned that we missed some of your great comments, Counselor Plunkett.
So for future, I think what we tried to do this year and having liaisons was nice, but it failed to accomplish what we tried to accomplish in it. Because it felt like we really didn't convey the information wasn't conveyed to us. Our feelings we didn't respond in a way that you guys felt like we were conveying information back to you.
And I think the way I've done, sometimes it takes an all-day hearing and you sit down with every department head and go through it. And I'm there and I'll be the first to tell you because I'll have known it already, you can't afford 7 new firemen unless, okay, you do something with cash balance or something like that. My job would be to point out the road. But I think that's how you almost have to have that type of interaction. And I was listening on those other ones, I'll be the first to tell you where the roadmap looks like, because I know it from a whole bunch of other places.
Yeah, I think that's probably what we should do in the future. I would only put a plug in really. So Tammy, I don't know if you were in all the meetings or not. I was at the Parks meeting. We met for an hour. I thought it was a good meeting. There were, this is my opinion, first time doing this. There were some things you guys took out. You took some large expenses out. So I appreciated that you were listening to my concerns about what I thought would pass and wouldn't pass. I don't know if that happened in every other meeting. But the concern I had then was, how did everybody get to hear that? Or did everybody get to weigh in? And I realized that the approach was that was my role to play in that meeting. So I thought it went okay, but I do agree that I would have committed myself to an entire day to kind of walk through each department for an hour and just present it and hear from everybody. I think that may have been more productive, but kudos to at least Jared and team and the Parks Board for, I thought, what was a good conversation.
I mean, I think for what it's worth, I mean, I have constituents ask me all the time if the budget process is always like this. And I'm sensitive to the fact we have a new administration, we have new software, we have a whole lot of new stuff going on. In prior years, the budget process was literally getting every department head in a room with all the counselors. And at the time it was an Excel spreadsheet. This is what we expect to spend. This is what we've spent so far. These are the cash balances we have available. And then as we quote unquote worked through the budget process, meaning as revenue started to come in and we could see those projections, we already knew what the requests were. So we could start making those adjustments along the way. And that was a process that typically began at the end of July, beginning of August. So we would know what each department wanted by mid-August. So there was no surprise. There was no, there was no surprise. I mean, it's really, it just seems like, again, I get it. New software, new administration, new everything. But man, that was really, really easy because everyone was in the room together.
Yeah, and the sustainability plan, I think, will also help. And that's also a new process and looking out more than just 1 year. So we're really looking to put a tool together that will give us that roadmap going forward and not just looking at one fiscal year. And as Greg mentioned, once we have that plan built, we will already kind of know what the next year's expectation is, because we're asking the departments today what they expect for future years as far as personnel requests. So how many firefighters in 2023 and how many in 2024. So that roadmap, then you'll have that now, and then we'll be able to adapt every year on what we can fund it on.
I guess from my perspective, if we're waiting to get 2022 budget so that until we get 2023, 24, and 25 projections, I would rather stop worrying about those projections, get the 2022 budget, and we can work on 23, 24, and 25 later.
We're not, we're working on the 2022 and then 2023, and that will drive from there.
The main frustration I have is that we're pushing this later and later into the month. And I feel like last year, my frustration last year was that we got it so late. I felt like I was handed the budget and pass it, or we're going into a process by which we won't have a budget, and this is what you get. So we're getting to a point where I feel like that's what's being handed to me right now again, where we're going to an October 1st, and you've got 30 days to review this. And honestly, we all are dedicated to this, but we all have other things that we do in our lives as well. So we need to start this next year at a much, much sooner level than this, to look at all the expenses and processes way before this as a group.
But why wait till next year? If we're going to get something on October 1st, why not? You guys have everything now. Give it to us now. That's all I'm asking. That's all I'm asking. Give me everything you have now. All the asks from the department heads so that I can look at it, and then I'm not surprised on October 1st. I know what's going on and we can have a productive conversation about it. That's all I'm asking.
And keep in mind too, fall break does fall in there when we get that. And these days, pretty much this entire town is gone. I know I'm not only am I gone, but also if I need to get a hold of somebody, they may likely be on vacation as well. So you kind of lose a week to also follow up. So just keep that in mind, that we kind of lose a week in that condensed time frame.
Good point.
Thank you. That's all the comments I have.
Thanks, Greg. Thanks, Tammy. Councilors, anything else on that? All right. Any other matters councilors may have? We've got approval of claims. Tammy, do you mind coming back up here? There was a question on the Councilor Trailer, who's not here today, had about one of the claims. I know you sent an email about it over the weekend, but could you maybe just give a quick update, just sort of a full circle on that one?
Which claims?
This is related to the first person expense.
Yes, and as I've explained before at the council meeting and at the check-in meetings, that there are expenses that were planned at a certain budget year that for whatever reason that they are being paid now in a future year. So the first person compensation study was planned for in 2020 budget, and the invoices are hitting against the 2021 budget. So the directives that the department heads are aware of is that you would find it within your budget. If a line goes over, then another line would get underspent. And so we are working with the appropriation. We're not asking for an additional appropriation. And we do have enough appropriation in order to cover the expense.
It's not an appropriation though.
Say again.
It's not an appropriation.
It's not an additional appropriation. Correct.
So in this case, it's $27,250. Does that mean last year that the 2020 budget
Was underspent.
underspent?
Yes, sir.
But the dollars weren't encumbered to this year.
Correct.
So what happens? Does that 27, should it be appropriated because it was
It does-
meant for 2020? I don't want to
Well,
hamstring.
because there are this timing issue occurs every year with some expenses that are planned in a year. It usually washes,
Got it.
right?
So
So there's
something-
something that's going to get delayed and something that got pushed, and then they
Got
wash each other out.
Yeah, okay.
So we don't have any concerns with it hitting the line.
Okay, that makes sense. Thank you.
Thank you.
Any questions on that, councilors? Any motions on claims?
Move to approve.
The first from Councilor Choi. I will second. President Garrett, all in favor? Aye.
Aye.
All opposed? Claims are approved by a vote of 6 in favor, 0 opposed. I'll make a motion to adjourn.
Second.
I heard Councilor Burke first, or the second. All in favor to adjourn? Aye. All opposed? Motion to adjourn is approved by a vote of 6 in favor, 0 opposed. The next regular town council meeting is scheduled for Monday, October 4th, 2021 at 7:00 p.m. in the Zionsville Town Hall Council Chambers. Final notice will be posted in compliance with open door law. Thank you all.